Hey guys, how's it going? This is Juan Deshon of Quest Trust Company, one of our IRA specialists. I want to talk to you about what a Roth IRA is, some of the benefits, how you can contribute, what are the contribution limits, how you make distributions, basic information that can help you decide whether or not you need a Roth IRA. Let's get right to it. The contribution limits for a Roth IRA. This means what can I put inside my Roth IRA on an annual basis? What goes from my checking account or my savings accounts at my bank into my Roth IRA, and what am I allowed to do? Well, for a person under the age of 50, you can put up to $6,000 per year into your Roth IRA. If you are above the age of 50, you get what's called a catch-up contribution, meaning the government gives you $1,000 more into that limit to contribute to your Roth IRA, making it a total of $7,000. If you're looking to make a contribution to your Roth IRA, we got to talk about contribution requirements. Now, there's two requirements to a Roth contribution, and the main one is going to be if you have earned income. This is one of the biggest questions we get. Can I have a Roth IRA? I'm retired, can I have a Roth IRA? I want to make a Roth IRA for my children. Can they have a Roth IRA? Well, the first question we're going to ask you is, does that person have or earned income? Earned income, for example, is going to be W-2 income, 1099 income, or reported on a Schedule C. Right? These are just examples of earned income, but please consult with your CPAs to see if you qualify for that. The second qualification to make a contribution to your Roth IRA is how much earned income do you make? Specifically, what is your modified adjusted gross income for the year you intend to make the contribution? As an example, if I'm an individual who makes $100,000 a year and I file jointly with my spouse, I am qualified to make a contribution to my Roth IRA, and so is my spouse. However, if I surpass the limit, which for the year of 2020 is just above $206,000, if I file jointly with my spouse, I can no longer contribute to a Roth IRA. To see if you qualify, check out our website. Here in this Roth section, you can see if you qualify and your adjusted gross income is above or below the requirement for the Roth IRA contribution. But again, consult with your CPAs. Now, one of the biggest reasons that you want to have a Roth IRA is going to be how the distributions work. Typically, people have 401ks, IRAs, and what you're doing is you're deferring taxes to a later date. With a Roth IRA, you can actually take tax-free distributions so long as they're qualified. So again, what I can do is I can put money into my Roth IRA, invest it, and later on when I grow it and I'm of age, I can distribute that completely tax-free. No matter if I started with $1 and I grew that dollar to $1 million. If it stays in a Roth IRA and I take it out qualified, it becomes completely tax-free to me. Now, what is a qualified distribution? How do I get that tax-free distribution? How do I make sure I can do that? Well, the first thing is you got to be 59 and a half or older. Right, that is the first requirement. The second requirement is you have to have had the Roth IRA for at least 5 years. Now, this could mean that you could have a Roth IRA anywhere. Let's say you're 30 years old now, but back in the day at 20, you had a Roth IRA and you started it and contributed to it, but you know it wasn't the right time, so you took the money out and you closed that account. Technically, your clock started when you were 20. And so now you have that qualified Roth IRA for more than 5 years by the time you reach 59 and a half. So when you do reach that age, you now have tax-free distributions. So remember, you have to have two requirements: age 59 and a half, and have had the Roth IRA open for at least 5 years, take tax-free distributions. Now, to these distributions, there are some slight exceptions, right? And if you want to go through the full details, please consult with your CPA or give us a call at 855-FUN-IRAs and speak to an IRA specialist. What we can do is figure out if you fall under one of these categories. But as an example, a few of these exceptions are going to be towards a first-time home purchase, up to $10,000. For example, if I'm going to go and buy my first home, my first homestead, I can distribute up to $10,000 of the profit in my Roth IRA. Other exceptions are going to be qualified educational expenses, usually higher education like university, and as well as adoption or birth expenses, up to $5,000. So I've gone over a few things about the Roth IRA, and you can definitely see more or call us for more information. But why do you need this Roth IRA? Why should you open a Roth IRA? Why do all the gurus talk about having a Roth IRA? Well, the biggest thing I believe is that the Roth IRA is a glorified savings account. Money you put in, so again, that contribution that you've put into the Roth IRA, can come out at any point in time. I'm going to repeat that. The money I put in, let's say for example, I put in $6,000 now for the next 10 years. At that 10th year, I have $60,000 in my Roth IRA that I can distribute at any point in time because that is my money. What I have to leave in that Roth IRA until I retire or am at the age of 59 and a half are going to be the earnings. This is a big deal because this does not tie you down to this Roth IRA forever and lock up the money for you to never use. If you contribute to your plan, you can take it out any point in time for emergencies or whatever the case may be. So don't be afraid to start that Roth IRA and contribute $6,000 or whatever you can for that first year and continue to do so because that money is always available to you. Second reason why you might want a Roth IRA account is because of the tax-free growth. If you're not necessarily looking for a tax deduction on your contributions to traditional IRAs, or you're already maxing out the contribution to your 401k at your employer, why not add a little bit more to your safety net and contribute to a Roth IRA? Again, there's no ties, there's nothing locking in the money. You can continue to grow that money to completely tax-free. And of course, at Quest, that Roth IRA is also completely self-directed. Imagine a real estate asset with tax-free growth. If you're an individual who has a traditional IRA account or pre-tax funds and you want to get into a Roth IRA and you've already contributed but you need more funds in there, well, you can consider doing what's called a Roth conversion. This is when you're moving money from a pre-tax account like a traditional IRA, 401k, to a Roth IRA. By doing this, you will pay taxes on the amount you convert. You will be adding that convertible amount, let's say it's $10,000, to your gross income for that year. Now that income, you will receive a 1099 and you will pay for that come the following tax filing deadline. So as long as you're eligible and you're able to pay that tax and you're aware that it's coming and you can prepare for it, it may be the right move for you. The benefits will be now instead of growing your funds tax deferred, you will grow it tax free. Now, we have a class on Roth conversions. If you want more information, please check out the following classes. So we've gone over the basics of a Roth IRA. We've gone over what you can do, the contributions, the distributions, how you can make a Roth conversion, why you may want one, and why you probably need one. And of course, all of this can be self-directed. Continue to browse our site, continue to browse our YouTube series, and you can find more information on the accounts, more detail, or call us. Call us at 1-855-FUN-IRAs and speak to an IRA specialist that can assist you to determine if this is the right move for you. We can also assist you with any other accounts that we have here at Quest and decide how we can properly self-direct them. So, like, subscribe, and we'll see you guys in the next video. Thanks, guys.